presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to John in Orlando. John, what's going on, brother?
Good afternoon, Tom. How are you?
I'm doing great, man. Yourself?
Good. I want to tell you, I've been listening to you since your radio days back in '99. Appreciate what you guys do. But what I really enjoy that you brought back Tim Ward. This guy is as smart as a whip.
I am so happy for that feedback.
Yeah, because he's one of a kind. He's got to be the number one market timer. I'm telling you, it's like he calls it really, really good.
He does. I really appreciate the feedback, man.
Yes.
Now, Tom O'Brien.
Good afternoon, everybody. I'm Tommy O'Brien, coming to you live from TFNN. I still got to work on that growl, man. I'll get it going. Can't ever match it. I'll try and match it. We'll live it up. S&P's negative by 14, folks. NASDAQ 100 negative by 103 today. We come into non-farm payrolls tomorrow. Remember, non-farm payrolls tomorrow at 8:30 with the final hour of trading on Thursday. And yeah, you got the Musk-Trump relationship just cascading in real time. Pretty remarkable. Who had it happen? A little bit longer than most happened, right? Than most anticipated is in Inauguration Day, January 20th. Elon lasted more than 4 months. And then the richest man in the world and the most powerful man in the world are no longer on speaking terms. They're on speaking terms, man. But, man, Tesla, right? How about it? In real time, the Oval Office, and it's not stopping, man. Down by 14.3%. Hoo-wee. On a capitalization standpoint, Tesla, folks, has 3.2 billion shares outstanding. Excuse me, for every $10, that's 32 billion. Yeah, and we've done 5 of them. That company's down 150 billion in market cap today. 150 billion. Whew. You talk about it, man. But it's on the front page of everything, as you'd expect. The Trump-Musk relationship ruptures in real time. Now, what's remarkable here is you have... I want to get where... No, let me get the exact... No, I wanted the exact one in real time. They're cascading in real time. As in, literally in the Oval Office. Yeah, here it is. You had Elon tweeting in real time. Let me get it. Yeah, here it is. In a remarkable scene, Musk responded in real time, posting rebuttals on social media as the president spoke. Such ingratitude. Can you imagine? Hey, who says that to the president, right? Elon. We got a full hour, folks. You don't get to see this. The richest man in the world and the president on social media battling it out. And yeah, Elon's talking about ingratitude. Without me, Trump would have lost the election. Dems would control the House and the Republicans would be 51-49 in the Senate. Not sure that's true. Elon's putting it out nonetheless. And as of this article, they were down as much as 6%. Well, guess what, folks? They're down by 14% now. 14%. And yeah, Elon's out there on the tweet machine where he lives. And this is talking about the tax credits. Trump's saying that Elon didn't say anything until the tax credit. Elon saying, you passed this in the middle of the night. No one saw it. Okay? Yeah, that's not the end of that one, man. Elon, Trump, we'll see how it rages out. Nonetheless, 4.5 months. January 20th. Yeah, 4.5 months. But Tesla, I don't know. And the tough part about it is, for Tesla, this is, right? Because this is where it goes. And that's the last part about this is that Trump mentioned the easiest way to save money in our budget is to terminate Elon's government subsidies and contracts. I was always surprised that Biden didn't do that. Can't get a good one in without the Biden in there, right? Either way. And that's part of it, man. Now, I think that's... the president talking about someone's free speech and saying that they're going to punish them financially for it. And the market might think so too. But guess what? That's what's coming right now, and Tesla's not stopping. As I talk, you're making session lows, you're down by almost 15%. And be careful in that equity, folks, because you want to talk about animal spirits, picking a president, picking a fight with the president. Even the richest man in the world is going to have a difficult one winning that one right now. Okay? So be careful, man. Let's jump around the other equities. Amazon. So yeah, Trump and Xi talking today. Look at the volatility on Amazon. We spike higher, we spike lower, all the way up to almost 212. We're back to 209, still up by 1 percentage point. Jump over to Apple shares right now, down about 0.3%. Microsoft in the green by 1.2%. And yeah, that's what started things off, right? Where am I? There we go. Discuss trade, rare earths, and call with President Xi. And that's the first time they've spoken since the election. So yeah, anytime you have communication, that's a good thing, man. For those trade talks, right, you always want to have communication. It's kind of like the internet, where if all you do is text somebody, things get lost in conversation. You can't quite get, you got to talk to people. And that's more so true with, I'm sure, something like this than anything we're dealing with. The call lasted 1.5 hours, 90 minutes. Very positive conclusion for both countries, Trump wrote on social media. So that's how the day starts. And then we get a little volatility as we persist. And then you got Tesla dragging things down. We jump over to NVIDIA shares, down by 1.2 as well, giving up some of the gains. AMD shares down by 2.2%. Intel down by a percentage point as well. Now we jump to, we were talking retailers. You had, whether it was Dollar General, Dollar Tree, Five Below. Opens higher. Look at the give back, though. $10 off of the highs we had this morning already. But decent numbers from Five Below. On a longer-term basis, though, I was looking at that this morning. Check out this one, right? So what do you got? You're bumping into the highs, and it's in the lows of 2023 out here. That was the low of February of 2022. You see the volume we had in there on a weekly basis. Let's pull up a monthly. Yeah, that bar from September 23, we had some volume there. We got volume at the lows, but that's an acceleration like everything else. Oh, thank you, Al. Not sure what's happening there. All right, you should have my screen now. That journal article got stuck. And look at this. We got markets. All right, we got 40 minutes to go in trading, and we got markets melting a bit. S&P is coming down to session lows. We had a spike at 215 to 59.50. We're trading at 59.59. You can't help but watch the carnage. Tesla down by 15.2% right now. Man, you're going to see the stories tomorrow about what that just cost Elon personally. And hey, I think for what, yeah, we'll see how it plays out, man. Market cap wise, though, my goodness, $51 to the downside from look at this. On Tuesday, you were trading at 360, and you're going to be at 280. And where are you stopping? Well, we're blowing past this consolidation high. Maybe you're back to the lows of 216. We're at 280. It's some nice volume. You're coming into the high of this bar. 274 is the high. Maybe you start getting some support there. That is the big bar from April 9th. Imagine that. Tesla's all the way back to just the pop you got from the low of April 9th. Look at this volume we're getting, man. All right, market's melting a bit. S&P's off by 25. Stay tuned, folks. We'll come right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey. Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. And boy, we got 3 drives to the bottom here. 59.38 S&Ps. What did we just drop? Look at this. On a 5-minute basis. Let's put it on a 1-minute basis, man. Did I miss a tweet? Did I miss a Truth Social? Somebody let me know. Oh, there we go. That's it, Z. I couldn't ask for it. Is that serious? I love it. Whatever it is, Elon's out there. He's tweeting. Quite a real world. You want the best reality show on television, folks? Show up to Wall Street. S&P is off by 45, 59.35 right now. Man. We live in interesting times. That's the expression, though. Imagine living in the times of the Roman Colosseum where you had gladiators. Those are interesting times. Imagine living in, right? We live in interesting times. Very interesting times, as they'd say. Boeing's shares off by 1.5%. We jump around. Keep an eye on that dollar, sitting at 98.777 right now. And yeah, so let's jump around. Amazon slightly in the green, but we're all the way up to 212. You're pushing session lows at 207 for Amazon right now. Apple down 1.1. Oh man, look at this. 17.6%. This is remarkable, man. Always have a stop. Always have a plan, folks. Never think you're smarter than the market, okay? The worst case you can get yourself into is a scenario where you don't plan for something, you don't take a stop, right? It goes further. You say to yourself as you hold Tesla, it's breaking the lows of this morning. It's not going to go that much lower. We're already at the lows of this morning. We're already at 310. It's at 310. It's at 300. It's at 290. It's at 280. You got to pick a stop, man. Not, the odds that Tesla goes down 16% today. Higher than anyone anticipated, I guess. But my goodness. We jump over to crypto. Coinbase down by 5.6%. Check this guy out, right? Look at this. We might get a big bearish engulfing here going. 241. We got a daily. You got 40 minutes left to go in trading as this market is melting right now. Okay. We got our man Tim Orr coming up on the next segment. Be interesting to see what Tim's take is. This whole market reverberating right now. With the 10-year sitting at 4.4. Excuse me, with a DXY 98.75. And yeah, just sitting from the bounce. So man, they're selling this market. Man. I mean, Elon's out there saying Trump's in the Epstein files, and that's why they haven't come out. I know you were posting it in the Denzi. You almost can't know what's satire, sarcasm, and reality these days, folks. Z posted in the Den the tweet. I'm like, I guess I should probably pull up Elon's Twitter feed before I say that Elon just said that Trump's in the Epstein files. And how does Elon know he's in the Twitter? It doesn't matter how he knows. He's calling him a liar. He's telling he's in the Epstein files. I mean, he still runs a public company. Imagine any other CEO having a personal spat, whether it had to do with the company or not. Now, this, you could make the case, has to do with the company because $7,500 tax credits are in play. Mark this post for the future. The truth will come out. The end. Yeah, wild stuff. Wild stuff, nonetheless. All right, let's get back to it, man. So we get the jobs number coming out tomorrow, okay? Now, as you get the jobs number tomorrow, okay, trade deficits, tariffs, of course, inflation. The trade deficit cut in half on the record drop in imports. This one out early this morning, okay. U.S. trade deficit fell to $61.6 billion in April, the lowest since September of 23. Imports fell 16%. Consumer goods down 32%, largely driven $26 billion drop in pharmaceuticals. How about that one, right? Exports rising a bit to $289.4 billion. And yeah, so that one due to countries buying before the retaliatory measures. So what's going to happen is exports rose. You're going to see exports dip a bit. In the future, this is, right? Exports pulled forward some of that buying, of course, and you had the trade deficit dip with imports falling. What's interesting, though, is that you didn't get the same lift on imports, right? But this is for April. It's not for ahead of it. Liberation Day was April 2nd. So you had this big lead up in the beginning, and then you're going to see a little bit of a drop. And yeah, there's your drop. Now, the thing to keep in mind, though, and that's what I'm talking about, is that these spikes leading up to it, that was the beat in the rush, right? These final January, March, February, March, that was pulled forward. Dramatic drop. It might even be more in May, folks. It might even be more, right? We'll see how it plays out. But that is ahead of non-farm payrolls, which kicks in tomorrow at 8:30. And yeah, you got markets melting with the S&Ps. And folks, if you're a technical trader right now, put that 6,000 price point on your chart, man. It's right where all the selling began in late February. We've been talking about it basically since then, okay? And every time we get up there, you're giving it up, and boy, guess what? We're going to give it up on some volume today, man. We're going to have rip-roaring volume when the S&Ps are pulling back. We're off 50 points, 0.8% right now. And you've already done 1.27 million contracts, which is more volume than we've done over the last 3 days. You're going to put a big number up, man, as we pull back from these highs yet again. But tomorrow's going to be an important one. So non-farm payrolls. We had ADP private payrolls. We got those on Wednesday. That number was only 37,000. And what's so interesting is what happens on that number. Well, there's your Wednesday number. We get higher price, lower yield on the potential of a Fed pullback. Maybe they're going to start easing rates, cutting rates, if the economy is only adding 37,000 jobs a month. And by the time we're going to get to the non-farm payrolls, we're going to be right back to where we were before that number. But man, you see a big number on the miss side tomorrow, watch out. Because it feels like this market is just ready to get the indication that the Fed has clearance to cut once or twice. And I'm not talking about a full-fledged campaign of 4, 5, 6 cuts. Market's just looking for when they're going to bring 1 or 2 right now. That's it. They don't have that clearance right now. You get a lot of Chairman Powell saying risk-reward wise. There's not a lot of risk for us to wait when we can come quickly with the tools that we have, right? Those types of statements. So risk-reward wise. But you start getting some weakness like that, 30,000, 20,000. If ADP only added 37,000 jobs, you better believe there's a possibility that we actually get a decrease. And if you ever get a drop in the jobs number tomorrow morning, watch out. These yields are going to spike. You're going to have the 10-year at 4.25. 4.2. Rates will go so low so quick. And what would that do? That pull that dollar right back down on the trend that it's going. We're pushing 98.70 right now, right near those lows. All right, folks, S&P is off by 39. Tesla shares off by 16.4%. Not often you have the richest man in the world telling the president he wouldn't be the president if it weren't for him. Here we are. All right, folks, stay tuned. We'll come back looking at the market. We're going to come back with our man Tim Ord. We'll talk some indices. We'll talk some gold. Don't go away.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the 2nd and 4th Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We got the S&Ps off by 31 points right now. The NASDAQ 100 off by 161. We got a little bit of selling. We got Tesla in the red today. And right now we're going to jump over to our man Tim Ord. We talk to Tim every Tuesday and Thursday at the bottom of the hour, folks. Always check it out. And you can reach Tim at his website, which is ord-org. Oracle, ORD-ORACLE.com, ord-oracle.com. Tim Orr, good afternoon.
Yeah, good afternoon. Kind of a dull market we got here.
You know what's not dull, Tim? Elon Musk and Donald Trump going at it on Twitter. No, I had to. I'm sorry, but they're having quite a day. I can't. It's too amusing for.
Yeah, it is amusing.
Hey, listen, man. You got to have some laughs. I was saying, you got the richest man in the world, the most powerful man in the world, and they're like battling it out on Twitter. Why not? But let's talk some indices, man. I got your charts up here, Tim, and let's start it off with the SPY if we can. Go for it, man.
All right. Anyhow, I listed in blue here, blue squares, the ticks and trend closes that are relevant over the last, actually since about early April. And we kind of have a few of them here. We had one back on May 5th, I think it was May 15th. Got another one a couple of days ago last week. And we're getting another one today, or actually got one yesterday, 1.3, but only had 17 downtick readings. And I thought the market rally up to 610, and I'm kind of watching here. We're off 50 or 0.5% on the S&Ps. I don't have my Thinkorswim program up right now because I'm using this computer for this program, but it's kind of a wishy-washy here. I'm in the market pretty close to where we are right now, just a smidge lower, and I'm thinking about selling this position. I thought we might get to 610 on the SPY, and the way the volume's kind of coming into today on a little bit to the downside. It's not ideal. If you notice, can't see it, but yesterday's volume was about 10% lighter than the day before, and so that it's not a lot of energy to the upside. So it's not really a bearish move here, but it's not really bullish either. Let's look at the weekly charts on the next chart. So anyhow, the weeklies rule the dailies, and the last high came on 2 weeks ago, which is that red line here. And that came in, I think, 370 million shares. That's on the weekly time frame, so that'd be on tomorrow's closed volume. And we're not going to come in this week on 370 million shares. I don't know what we're going to be, probably less than 300 or thereabouts. And so we're testing a weekly high against the previous high. It's going to be at a lighter volume, and right now we're pretty much at that previous high. So on a weekly time frame, we may find resistance right here. But you got to wait until tomorrow's close. For some reason, volume jumps up tomorrow. Then that would negate that idea. But we're still in consolidation. It could be just a little lower left or right shoulder. I think this whole pattern, here's the head, which is basically the April low. The left shoulder is from December to, February. I think the right shoulder's starting right now. There's real good support at around 370 area, which is basically jumping above these highs. So we may go down here, then may back up and build the right shoulder. But probably over the next 2 months, it's probably a market's not going to go anywhere. The reason why I'm saying the next 2 months is this is the monthly chart on the SPY. The right shoulder started in December and went into the head, which is April. I just took a cycle of indicator, and so that means basically August is where the next rally should go, as head and shoulders pattern are symmetric. If the left shoulder is around 3 months, the right shoulder approximately be around 3 months. So they always look symmetrical. So what we're entering into is the market, they call it December doldrums, and it's starting to look like that. So I thought we'd get a 610 target. I'm not sure we're going to make it here. If we get panics on the ticks and trend tonight, which we may get it, I'll wait till tomorrow and see what to do. If we don't get it tonight, I'll probably bail on that position I got long, which is just going to be a minor gain. But it's not a market. At least it's not set up at this time to really short. The reason why, because the VIX is darn low, and around 17 and below is usually not a really worrisome sign. So even though we're we're kind of making higher highs. VIX is still making lower lows. In general, that's bullish. It's just kind of a market you do really want to trade hard either way. But I do think a hard trade's going to come up, but it's not going to come up until probably that August time frame, where the market may wander around in this vicinity right now between 570 to 610 and not really go anywhere. Then August, you get some sort of a climatic low, probably not too far from 570, and climatic is good. Climatic is, panic. And so we'll probably have some sort of panic ring in August, and that'll start the next rally up to 740. And that's the one to catch. Between now and then, I don't see anything really dramatic here. It's just kind of a garbage market. So, but, it's always quiet before the storm. But this quietness, I think, may last until August. So it's, not really a big bear here. But go ahead, sorry.
No, it's great, and I love, it's pretty cool that you come on. You're on every Tuesday, every Thursday, 3:30. Okay, we talked to Tim, and it was just great that we had, some real action right as you were coming on. Especially, S&P has probably dropped 40 points, Tim, in like the 10 minutes that you were just getting ready to come on the show. And when you're watching, you talked about the volume, of course, but for those traders out there, and I love just the way you went through, just kind of your own mentality of, we're watching it today. So is that something when you're making that and you're watching? And I love how you go shorter. You go the daily, the weekly, the monthly, and you started off with the daily. So for a day like today, are you watching that and you're literally just saying, and I know that it's not this simple, but, this is a volume bar that is not indicative of strength, and the way the volume's coming into the downside, that might change it? Or how I was wondering how, because I think so many of us, right, you watch a day like today, boom, the market's trading down, and we see the bounces though, and I just, how do you look at that? Because I think that was so cool when you started with that.
Well, actually, I got back here, the dailies here. I kind of watched as the volume pushes up. Like, I don't know, you start on this day right here. If you take that down, that volume day was about, I don't know what it was. But anyhow, as the market pushes up, the volume should be equal. Right. Yesterday's volume or higher. Yeah. It turns out to be 10% less, which it was yesterday. That was kind of a bearish sign that we're going to maybe start a consolidation.
That gets your spikes up. Perfect.
Yeah. So, but we hit another new high today in higher volume. If we're going to end up today, I would stay on that position long.
We got to take a break. Folks, we're going to come back, finish this. We're going to talk gold as well. Stay tuned. Setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. S&P's down by 22. NASDAQ 100 down by 135. Market clawing back some of those losses, though. Getting a little bit of a bounce. We're solid 30 points off the lows. We're talking to our man, Tim Ord. Remember, folks, you can reach Tim at his website, ord-oracle.com. And, Tim, let's talk a little bit of gold if we can.
All right. This chart is the bottom window is GDX to ELD ratio with a Bollinger Band on it. Next window higher is a GDX advanced decline with a Bollinger Band on it. And next window higher is a GDX up-down volume with a Bollinger Band. The top window is GDX. And what I did when three of the four indicators close above the upper Bollinger Band, which all four of them had done it over the last couple of days. We're actually still above the upper Bollinger Band. Normally you get consolidations, and all those blue dotted lines are times when that condition was present. So we're up against a resistance area. This is one indicator I use. Usually I like to have two different types of indicators to really help increase the odds of the signal, but it's not the time to chase the gold stocks right now. And we'll go to chart number, whatever this number is, but this is a weekly chart of GDX, and the weeklies roll the dailies. I do volume studies on the weekly just as well. If you notice right here, back in mid-April, we had 154 million shares traded that date. Now this is a weekly chart, so this volume won't be updated until tomorrow's close. But if you do the averages, we're not going to reach 154 million shares was traded on the mid-April week high, which is over a month ago, mid-April high. We're not going to reach that right now. When I did this chart with a day and a half to go, because I did this about midday, we're about 101 million shares. So we're about give or take 50 million shares short. And so that averages out about 30 million shares a day to get to 150. So we're not going to reach that most likely. Sure. So we're testing a previous high of mid-April on lighter volume on a weekly chart. So normally you need a sign of strength through a previous high. A sign of strength is at least equal volume to the previous high. If it's 10% or less, which this one probably will, it's going to be resistance. And that implies you can't get through that high, and reverse and try to take out the previous low. Well, the previous low in this case right now is around 46, give or take. Okay. I think we're doing something a little bit deeper than that. But anyhow, we don't have the energy to push through the previous high of mid-April. So I think because of this chart and the previous chart, we're running into resistance. We're going to have some sort of a pullback. The pullbacks are good. We had a decent run, from January. We kind of ran up at the April. I think April is where the consolidation started, even though there's a lot of gold stocks doing really well. They're probably going to take a breather here. And at least 48, I actually think we're going to get down to 39, thereabouts, because I think this whole thing is free drives to the top pattern. But even to go one step further, this is a monthly chart. So we got the daily charts. showing there the market's extended. We got the weekly charts testing a previous high at a higher volume, most likely, unless for some reason you get super high volume tomorrow, which undoubtedly we won't. But if you even look at the monthly charts here, this is GDX with the Bollinger Band on it on the monthly time frame, and we're probably making a double high on the monthlies too. We're not, the month ends, that's a long ways away. That's 3.5 weeks away. But we're up against the previous high. And on the weekly time frames, we're going to show a bearish divergence in volume. And if you notice, if you get an 80% above the upper Bollinger Band, like these cases back here, normally you're due for consolidation. In other words, the market stretched too far too fast. And if you notice this, if you can kind of see it there, where we are right now in this, we're about 100% above the upper Bollinger Band. Okay. So the open and close right now is 100% above. And that's really rare to get that 100% above the upper Bollinger Band on a monthly time frame. So This is a monthly, not a weekly. So it's pretty rare to do that. And if you notice also, those previous highs, when you get above the monthly mid-Bollinger Band, it's kind of hard to see, I know on TV there, but all of those were double tops. This one back in 2016 was a double top. 2019 was double top. 2020 was a double top. Chances are this one here is going to be a double top too. So I'm looking for a pullback. I still think three drives are top patterns forming. Big support at around 40, you rally through 40, probably going to come back to it, then rally back up. But if you also notice the monthly RSI is way in the heck up there. Here's a 70 that correspond to a Bollinger Band, 80% above the outer Bollinger Band. Here's another time he got up to 70 on the RSI. We're 73 right now, almost 74. So this is on a monthly time frame, not a daily or a weekly. It's a monthly. Yeah. So the monthlies rule the day, or the weeklies rule the daily. So I'm not a big bear. I'm just saying it's probably we're into the summer time frames, which a lot of times summer doldrums. I've raised a little bit of cash on the gold issues, took some profits where some of these stocks went above the monthly Bollinger Band, and so I didn't step out 100%. But, some of those stocks I stepped out 50 to 80%, always kept my foot in it. But I think if we do get back to 40, I think 39, I have a bunch of different indicators that measure sentiment on gold also. And I think sentiment will be high. But I'm actually getting quite a few emails right now asking what's gold stocks to buy. And I think that some of the lower tiers will do it, but usually when I start getting emails and calls, that's another sign that over the years has told me that, if everybody's really perking up to buy gold stocks, probably not the time. But when you get back down to 30 or back down to around 40, nobody will be calling me to buy gold stocks because if they did get long here in this vicinity, chances are they could possibly get beat up a little bit. But
I
nothing
remember
significant.
those days well. You, my dad, and my dad, he wouldn't want any calls, Tim, right? When gold was rocking, he's like, because you get all those calls, and it's like, uh-oh, we're getting all the calls. That's it. We're at the top, and we're generalizing, folks, but that is a real deal. And, I appreciate the way you break it down, Tim, the daily, the weekly, and the monthly. You go over your ratios and just the charts. And, just from I'm in a similar ballpark, man, and the move that we've had, I was just jumping around last night on some of these equities. You got an equity like wheat and precious metal, and no matter where you jump, you could do it, man. Harmony, all of these equities. Yep. Wheat and precious metal right now is a $41.5 billion company. And 2 or 3 years ago, you were like a $15 billion company. It's like, my goodness, and it goes, that's just there. So that's $25 billion in market cap, maybe a little digestion might be in order. Yeah. Tim, thank you so much for the time. Folks, check it out, ord-oracle.com. And don't forget, Tim's got a couple outstanding webinars under the services tab at TFNN, the secret science of market tops, how to identify those market tops, and the 6 secret ratios. Every trader should know both of those. $149 run on the services tab. Tim, thank you so much, man. Have a great week, great weekend. We look forward to talking to you next week.
All right. See you then. Thanks a lot.
Thank you. We'll be right back, folks. Stay tuned.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. And we finished up that interview. Always a great segment. And check it out, folks, under the Services tab. Secret Science of Market Tops, how to identify them. Tim's not calling for a market top, but that's a great webinar to have in your repertoire no matter what. And then the 6 secret ratios every trader should know. And you're talking about the TLT VIX, the SPY VIX, the SPX VIX, the VVIX VIX, Bull Bear Ratio, and the Trend Panic Levels. Both those webinars right under the Services tab. Check them out. You gain access to them, and they'll be accessible on your members page to watch as many times as you would like. All right. Let's check in on the real world escalation of the richest man in the world and the most powerful man in the world battling it out on Twitter like two teenage girls with more power than anyone could amass ever. And today, Elon's company loses $150 billion in market cap. Ooh, you talk about it, man. Down by 13.8%. And, in these meme stocks, folks, when you're down 45%, $45, and you got a battle between your CEO, the fundamentals are driving this. It's not going to drive it for the next few days. Hopefully that calms down. But boy, between Trump and Elon, who's going to calm it down, right? Not sure that's going to happen. And hopefully Tesla shareholders don't get hurt in the process as some collateral damage. But that's what's happening today, man. And they're not necessarily collateral when you're talking about a $7,500 EV credit. Pretty remarkable. We jump back to those yields numbers. Put it back to a daily. And yeah, we're almost at the session lows. Check it out. 110.25 right now. We got the 10-year at about 4.4%. And you get the dollar saving itself a bit. We're at 98.79, and that gold contract right now, 33.79. All right, folks, thanks so much. Have a great night. Have a safe night. And remember, we got non-farm payrolls tomorrow morning at 8:30, and it's an important one. After that ADP number, a lot of pressure. You get a weak number, you might see those yields dropping, folks. All right, folks, have a great night. Have a safe night. We'll see you tomorrow morning at 9 o'clock. Thanks, folks.
Building